In today's video, I'm going to be channeling the spirit of a 1920s robber baron, Gordon Gekko, Bobby Axelrod, and Milton Friedman. So I'm going to be doing that through discussing the announcement that Harvard made that it will divest from fossil fuels. The second announcement that happened overnight was Russia's Gazprom announced that it has completed its Nord Stream 2 pipeline. And then I'm going to show my actual returns in Gazprom. I purchased it in 2017. I have approximately 107.7% return. Let me say that again, 107.7% return. Very much a value play in 2017. Was trading at just a few times earnings. Its P might have been 3, 4, 5. I was paying an equal dividend yield at that point. And so now I have 107.7% return. So just let's go over, the basic references, the 1920s robber baron, Gordon Gekko, Bobby Axelrod, Milton Friedman. So basically the pursuit of profit. So you see a lot of people, especially journalists, activists, aren't interested in the pursuit of profit as an end. They aren't interested in the highest and best use of capital. They're looking to use capital decisions or to make capital decisions based upon their politics, their sense of morality, their worldview, their religion, whatever the prism is there. But it's not a Henry Kissinger realpolitik. What is the highest and best use of capital? I am one in the minority that makes those kind of decisions. Meaning I look for the highest and best use of capital, which is why I believe my CAGR is 29%. Harvard's is, I don't know, in the low single digits. Once in a while it gets to 12. Because it's pursuing different aims. It's in the pursuit of appeasement as much as money multiplication. So let's just kind of get into it after that preamble. And this is the from the Harvard Crimson. Harvard will move to divest its endowment from fossil fuels. So there you see a bunch of young Alexandria Ocasio-Cortezes and Bernie Sanders and Elizabeth Warrens. Meaning activists, progressives in the town square protesting. You should also know what it's a competitive advantage to have your peers in a constant state of activism and protest, because you can be making money, multiplying capital while they're, holding blue sheets in the town square. But let's get to it here. So the move marks a stark twist in a decade-long saga that has pitted student activists against university administrators and dominated campus politics for years. This guy here, he's a graduate of 23, I guess of 2023. So long as Harvard follow through, this is divestment. Connor Chung, 2023, a Divest Harvard organizer said, "This is what they told us for a decade they couldn't do, and today the students, faculty, and alumni have been vindicated." So it's a victory for him. Harvard endowments $41.9 billion, does not intend to make future investments in the fossil fuel industry. So just kind of going through here, just reading. You can go through this. This is on the Harvard Crimson. You can see the actual website on the screen here because I'm using my nice Loom software. And then you see William E. Bill McKibben, 1982, founder of Climate Campaign Group 350.org and a former Crimson president, wrote in an email statement that Harvard's obstinance in refusing to divest for years cost the university prestige and money. So, you just have a sort of a celebratory sense there. And then it was just, to me, kind of poetic and symbolic of where America is going, where the world is going. So while Harvard is announcing, we killed the Keystone Pipeline recently. Harvard is announcing its divestment from fossil fuels. Literally almost at the same moment, Russia's Gazprom announces its completion of its Nord Stream 2 pipeline, an acceleration of fossil fuels that's going into Germany. They've also recently built Power of Siberia and others that are going to China. So they're going to be able to supply Europe, China. They're going to own the energy world, essentially. So we've kind of ceded that to a certain extent to Russia. And here's that news article. And again, these aren't my opinions. These are just what's going on in the world here. You see this is on Yahoo News. Russia's Gazprom says Nord Stream 2 pipeline, quote, fully completed. That, I believe, is the president of Gazprom there. Yeah, Alexei Miller. Chairman of the management committee, Alexei Miller, said that this morning at 8:45 Moscow time, construction of the Nord Stream 2 gas pipeline was fully completed. And you can go on. There's people like Sven Karlin and some others. You can go on some or just on Seeking Alpha and do like a deep dive into Gazprom as an investment, what it's building, its pipelines, capacity, cash flows, all that. I'm just kind of giving the news article here. Running from Russia's Baltic coast to northeastern Germany, the underwater 1,200 kilometer, 745-mile pipeline follows the same route as Nord Stream 1, which was completed over a decade ago. Like its twin, Nord Stream 2 will be able to pipe 55 billion cubic meters of gas per year to Europe. So there you go. Now, personally, in 2017, 2018, I thought that Gazprom may have been the best value play on the planet. And I didn't just feel that way. I mean, I did feel that way, right? But the sense of that, I actually allocated capital. I took a bigger position in Gazprom. So I just want to pull that up here. TD Ameritrade here. So you can see here, it was November 2nd of 17. And then November 3rd, November 9th, December of 17. So you can see, and then even into 18, July of 18, July right here, July 11th of 18, you know. So I've picked up over the last few years, I've been picking up Gazprom, picking up in the fours. By the way, it's actually $9 even today. So it's more than doubled. But see, 433, 431, 462. And then in 2019, it popped a little bit. So I picked up some at 7, 6, 9, 7, 7. It's showing my cost basis at 13,893. The value today at 23,850. Profit of 9,957. 71% return. My actual return, for those of you who follow this channel, I really do total return because I am a big dividend investor, and I think that you shouldn't, in my opinion, you shouldn't count dividends as a cost basis. So what I mean by that, and I kind of repeat this a lot when I'm doing my analysis of different investments. So if you see like 822.18, this 140.49 was a dividend, free money. That 140 today is worth 299. So they're showing the 140.49 as a cost basis. I didn't use my own capital. It's sort of that's almost internal compounding to me because I didn't use capital from my checking account for that 140. That was essentially free money, manna from heaven, however you want to look at it. And you see it again in 19, 791. So I actually calculated my cost basis is, and I wrote it down on the side here, $11,480.18. So what we're going to do to get a total return on this, so we're going to do 23, which you can see, I'm going to put the cursor there so you can see, 23,850.40 divided by, and we're going to do 11,480.18 minus 1. So yeah, 107.7% return. And then the way you can check that when you just want to check your math briefly is you could do 11,480.18, which is your cost basis, times 107.7%. That's 12,364 plus the initial 11,480. I might have lost some of you with this math, and then it equals 23,844, almost the exact 23,850. So the math checks out. So yeah, I'd like to do the math, just so you guys can see. You can do it on your own as well. So 107%, 107.7% return. So why do I bring this up? I'm not trying to get like necessarily make a statement on what Harvard's doing. I mean, you can make your own statements or opinions or conclusions. But what I'm trying to show here is there's opportunity if you're an individual investor, a retail investor. You know, I talked about Howard Marks's book that I read, and I thought it was an excellent read. And one of the things he talks about, Howard Marks does, is being able to buy from forced sellers. Okay. So Harvard's endowment essentially is a forced seller of its fossil fuel stocks. So things like ExxonMobil, Chevron, Royal Dutch Shell, if they own Gazprom, Lukoil, Rosneft, Petrobras in Brazil. So he talks about that you want to be buying from forced sellers. Think about it. You're buying, you know, a foreclosure in real estate, right? You're buying someone that's going through divorce in real estate. The judges order them to sell the property. So they don't have the leverage. You know, they're looking to just get out of the trade. So for you, you know, and again, I mentioned this yesterday, it reminds me in a way of Jeremy Siegel's Stocks for the Long Run, that Philip Morris, which was spun off in Altria, was the highest performing stock over the last time period. I think it was 50 years or whatever he did there. I wouldn't be surprised from, let's say, 2020 to 2040 or 2020 to 2050, if something like Gazprom or ExxonMobil or Chevron is one of the highest performers. Just a personal opinion, I could be completely wrong on that. But I think that because these companies oftentimes sit on cash, pay great dividends, you're going to continually buy undervalued assets. So, and that's what happened with Philip Morris, right? And so Gazprom, to me, you know, I'm not looking to sell it. I'm not saying it's as undervalued as it was in 2017 when it was trading for 3 times earnings, 4 or 5 times earnings, whatever it was then. You know, it's doubled. It's even more than doubled. But could Gazprom get to 12, 13? Certainly. And could it pay a 4, 5, 6% dividend for the next 20 years? So it's almost like Warren Buffett's Coca-Cola holding. He said he's like, I don't think I'll ever sell it. Now, is that the, you know, like, could he look for other options that would compound higher, perhaps? But, you know, it pays a dividend. It's a steady investment. And that's kind of like what I'm looking at here with Gazprom. Now, look, there's certain geopolitical concerns. You know, if we were to go to war with Russia, which I don't think would happen, hopefully it won't happen, but, you know, could they delist all Russian companies, something like that? And then there's that kind of risk where it goes from $9 to 10 cents, right? Or something, you know, I mean, something significant if there's a delisting threat. But absent that, if it's really going to be based and judged on fundamentals, I certainly anticipate Gazprom to continue to grow. Maybe not to double again, to go from 9 to 18. And I just did this CAGR calculator here just to show, because it's been about 4 years, a little under 4, 3.8 years. Initial investment, 11,480, 23,850.40 is the present, you know, the ending value. Years, 3.8. So the CAGR is 21.2. We can just go to 4. It's not quite 4 years. We can put that in, nice round number. Just brings it to 20%. So there you go. So, you know, if Harvard's selling ExxonMobil, is it possible for ExxonMobil to gain this, have a CAGR of 20%, or Chevron, or, you know, again, this isn't, I'm not doing a deep dive into these companies. You can go on Seeking Alpha, you can do your own research, but it's just something as a retail investor, as an individual investor, there might be an opportunity for you here. And speaking of specifically ExxonMobil, my close friend and fellow Seeking Alpha writer, Logan Kane, actually wrote an article. Let me go back to the title here. And this was in December of 2020, so almost a year ago, a little less than a year ago. Buying ExxonMobil could be like buying banks in 2009. A lot of attention here. He's got 233 comments, 198 likes. Excellent article. Go and read the article. But there's a certain line in here that I think, yeah, here it is. And I think this relates to what's going on with the Harvard Endowment and the opportunity. Exxon may have no friends, but they do have customers. And I think that, in a way, kind of encapsulates what's going on with Harvard Endowment. They're investing based on appeasing their faculty, their alumni, appearing as sort of noble, so on and so forth. But at the end of the day, and I'm going to quote Benjamin Graham here, the stock market is a weighing machine, right? The stock market can be a voting machine in the short term, but at the end of the day, it's a weighing machine. Don't ever forget that. It's one thing never to forget. The weighing machine means profits, meaning how much are you paying per dollar of profit, per dollar of earnings? And if these companies are going to have profits and earnings well into the future of 2030, 2040, and you own these things, you're going to do very well. Again, people that owned Philip Morris, oh, you can't own tobacco. There's no law against it and this and that. And yet people that owned it had the highest, it was the highest performing stock. So that could be an ExxonMobil. Again, you can read this essay on ExxonMobil, look at his analysis. This was last year. Maybe you want to try to do your own analysis now to see if these things are still relevant. But I'll just say it one more time. I think it's a beautiful line. Exxon may have no friends, but they do have customers. And you can replace Exxon with fossil fuel companies. So fossil fuel companies may have no friends, but they do have customers. So yeah, so that's pretty much it for today. Just wanted to showcase that. Just hanging out at about 1,088, 1,080, 1,090, somewhere in that range. We can go here and pull this up and see where we are here. Stock market was up big, and then it kind of turns. So we see, yeah, it was up. The futures were up big, and then we had a little bit of a pullback. Actually, Gazprom, you see it pulled back. It was up to 9 earlier. It's down to 890. So still in that range. The 1,080,000, 1,090,000. I don't think. Well, I guess it's hard to predict that. I mean, it's unlikely that we cross 1.1 million this month. So we'll see. But I definitely would like to stay above that million, just for the sensibility of it. So anyways, guys, that's it for today. I appreciate everything. You can see here, more than halfway to being monetized. 560 subscribers, have about 1,000 watch hours. I need to get 4,000 watch hours. So I appreciate you guys watching these 15, 18-minute videos. I hope it's providing value to you. I hope you're learning a lot from it. And take care. Ciao.